Good afternoon. My name is Scott Redler, Chief Strategic Officer of T3 Live. Welcome to today's recap. So we came in today, futures were down 10, 11 handles. We weren't sure whether or not it would be a gap and go to the downside, what the real selling pressure would be like, if any leaders could pull us off the lows. And we also came in where we were no longer oversold. The oscillator I tweeted about, we talked about, was plus 10 from minus 75 when we were at 1291, 1295 to yesterday we were at around 1330-ish. And at that point we were positive. So no more oversold nature, meaning we need some good news, we need some real buying. And what happened? Bad news out of Spain, more rumblings out of Italy. Just the whole domino effect and the complicated headline scheme is just continues. And I wrote in my blog a few times that I've been doing a lot of reading about what's really kind of going on there and what's, the intricate parts of what can happen. And it is a little bit scary. I've tried to ignore it. I've tried to just look at the stock action. I know I took a very bearish stance. The weekend after Hollanday got voted in Greece basically said, I no longer want to play by the rules. I don't care that you gave us a favorable formula to give everyone haircuts for lending us money that we probably shouldn't have gotten, but now I don't even want to pay you back. And that's pretty much when I changed my stance. And that's also when technically the market started to break down. That's when we broke 1390. That's when we also started to get through, 1360. So I was very, very adamant that we could see 1320 to 1300, which was also the measured move of the head and shoulders top pattern. So if you look here, you will see, this was that head and shoulders top pattern. Here was the left shoulder, here was the head, here was the right shoulder. Right on this day was when IBD put us back in a market correction. So if you're a macro investor, that was a time to lighten up, maybe get out of a few tiers, but hold tier one in some of the stocks that are holding well. And this was a spot that I think I got stopped out of most of any trailing longs, because for a while it looked like maybe we were going to hold in decently until we wound up breaking. And then I think it was right around this day was when really the political landscape changed, and then we triggered the head and shoulders pattern where it went below 1360, retested it. You could have resold that, and then pow, measure moved down to 1291, and then from there we were oversold. You had a decent move off the lows. It was pretty choppy, not the easiest trading environment. Some participation, but it seems as if you just take a look at the chart now, it's this day where this bar says game over to that. A lot of guys like when I put it like my 75% chance that we're going to get somewhere, and when we were right here, I said there's a 70% chance we could see 1300 or at least 1320. Same way in the Wall Street Journal, we were quoted that I put a 75% chance that this day was the low of the year right on this third day, and it got quoted, and look what it led to. So, if you want to hold me to something at this point, I'm definitely just using a cash flow approach. I know I've been trailing Apple long, but we'll get into that. At this point, I do think it's the bear's ball to lose. We're still in correction mode. This day just engulfed these four. A lot of the lower pivots all seem that they tried to break to the upside and they might go to the downside. We closed on our lows. Well, we're trading a little bit lower after hours. So this 1295 to 1291 should be somewhat of a magnet. That if you're in any kind of longs, you definitely need a hedge. So with that said, very ugly bar. If you were trailing any longs from this, pivot low area, today was a day to get out of some. And if you're in some macro longs, just make sure that you might have to, go through a little bit of a headwind or a corrective type market. So with that said, a lot of guys have been following me on Twitter and on my virtual floor with Apple. You want to know how I approached it today, the strategy on a swing approach and on a cash flow approach. So I'm going to go a little bit in depth into it just to show you how you could have managed the position and show you why I stuck with it and what technically we saw. And if you look here on Apple, this isn't a touting video. This is an educational video. This is, remember when back here around 620 when the market bounced about 30 handles and it didn't bounce, that was your sell signal. Remember here when it had gapped up on earnings and then really started to give way and showed no earnings gap power and no pent up energy and just trickled to the downside. And then finally it started to show some volume surges and started to hold the 100-day, which many strong stocks did, and this was your swing entry. From here you had a nice 3-day move into the high of about 573.88. Came lower, and then remember on this day, it matched it, showing you that it negated that weakness right there. and then you had like 2 inside days to somewhat absorb this, this move off the lows, because really from 530 to, the 570 area, it's still a corrective type tape. Things aren't just breaking out. So I stayed in my macro long, and then really, we took some home long yesterday in my cash flow account and my macro account, and I talked about it on the virtual trade floor, talked about it on Twitter, both lined up. And then today, look at it. Look at yesterday's low, guys, 565.31. What's today's low? Today's low is 566.56. Did not give you one reason to get out of any of your cash flow long. If you were long overnight and said, I'm going to put a stop at the low of the day, you didn't have to get out. If you were still trailing your swing trade from here, saying, I'm going to trail it as long as it stays intact, I'm going to stay with it, you did not have to get out. On an intraday basis, if you look here, okay, you go to your 3-minute chart, you will see that overall from the open, okay, here was your first initial move off the open and didn't have enough juice. And then finally, after consolidating all day long, you had a few different buys. One of them was the morning high here. If you remember, this was the morning high. Actually, this is 574 from the previous day. The morning high actually was right here, 572.81. So using a tier system, okay, I was in tier 1 cash flow most of this time, because look what happened here as Apple was making a low, a higher low, another higher low. Really, the spiders were not. So if you look at 10:30, 11:30, and look at where the spiders were, spiders, were telling you a much different story. Spiders actually from 10:30 to 12:30 were making lows, right? Here you go, 10:45 down to 12:30. 12:30, the spiders on the lows of the day. Where was Apple at 12:30? Okay, 12:30. Apple was far from the lows of the day. It actually looked like it was about to break above this area. Okay, so relative strength. So intraday, even if you didn't have it in a swing account, you didn't have it overnight, you probably actually acted better because you didn't have any mental stress like a lot of us did, as we came in, it was down $4 or $5. So PS, and there's ways to trade it wrong. Look at this spot right here. You see this spot right here? I was at my desk, I was in, tier 1 cash flow besides my macro, and right on this spot, I bought probably tier 3, thinking it was going to break out and go. Okay, look what happened. Pow. It wasn't able to hold it, had to get back down to tier 1. And I think if you go to me, I think it was the first time I got a little frustrated and I threw my microphone. I threw it. Guys on the chat are like, what happened there? I didn't want to start cursing or anything, but I was just pissed. And I was like a little pissed that I also knew that the market was heavy and I wasn't sure if Apple was going to be able to do it by itself. And I actually thought Apple would have been able to help pull the market up, but that's how weak I feel like we are. So that's why it's been hard to take any size there besides trading it. So on that move, okay, I lost money. Okay, so I actually screwed up my whole cash flow average cost. So you go back to the chart right here, I had to get out of some. And then I left tier 1 on, okay, and then I had to go to a meeting. Okay, so at 12:30, I left. Actually, I went to a spin class because I was pissed. So I just left tier 1 on, and then you had a quick move. If this move would have happened right here from 572.80 to that little high of 574, that what was that? Almost $2 here. A lot different world for the red dog today. It didn't happen, but I still stayed with it. Then, once it crossed above this 574, and this was your real clean move. That's why you want to have levels, guys. Look what happened when it crossed here. Pow. Nice clean move all the way up almost to 579. So, in your tier 1, here it finally went and it actually closed above it. If you look at, closing bars, here you go on the 3-minute, it actually closed. So that was your advertisement that you can get in more shares there. It closed. You didn't anticipate it on this one. I bought it without seeing it close above it, so I anticipated it was my fault. Here, it actually closed above it. So if you were short versus that, you have also 1, 2, 3, 4. When was the last time you heard of a quadruple top? You haven't, because typically if it's there again, it breaks through. Then you had a nice little cash flow move. Then here you go again, and then this one was great. I didn't get back to the office until about 2 and change. And I wound up having to hold tier 1. So my cash flow account, I made a lot of money back, but I didn't have the wherewithal with the weak market to hold what I was trying to buy right here. So it shows you that there's a fine line making money in your ideas. There's a fine line of making big money or small money or over trading. And on that particular point, I got a little bit too rambunctious and I over traded and that ruined my cash flow trade. But it didn't ruin the overall trade because I went back to it. And then you had that one other spot where, in weak markets or market under pressure, sometimes breakouts are used for distribution. So that 576.40 could have been a push through, squeeze all the shorts out of it, and then if we were to close below, you'd have a tail there, and then, it would be more, then the pattern would change. So that's why when we went back through it, I'm like, you know what? I'm selling all my Apple, which I did. So I sold it in my swing account. Yes, I did. I sold it in my swing account. So, almost 40 points in a weak market shows you stock selection's key. And then once we recrossed that 576.40, I bought it back in my cash flow account, and now I'm going to do what I do best and trade it. And I do have some overnight, and we'll see how it handles tomorrow. Tomorrow, it did close. It closed through this small downtrend. It closed on the highs of the day above the moving averages. Let's just hope it's not a trap. You can't trade like you're going to be trapped, because then you're not going to follow the rules. The same way yesterday, this felt like a trap, right? Spiders closed on the dead highs almost, and then look what they did. They trapped the longs. It was a bull trap. Let's just hope that with this weak environment, this Apple isn't, a bull trap, but we'll see. So tomorrow, even if the futures are down, that's why I have a hedge. I'm short some Qs. Maybe you could cover the Qs, buy some Apple, then it trades through the high here of 579.99. And then the next real level could be this gap fill, which is all the way up to about 600. And, I don't know why someone took out my 50-day, but if you go put the 50-day back in here, you will see that the 50 days are 588. So, that's a reasonable target, but it's not going to happen if, France gets downgraded, which I think they're going to get downgraded. If we see this crazy pressure, it's going to be hard for Apple to do it on its own, because today, it was the NBA, nothing but Apple show. Everything else was a short. And it was even hard to be short, because on the price point sheet, we had a lot of prices that worked well in the morning. Amazon through 212. You look at Amazon, gave you a nice push. Look at that. Followed the rules. Again, shows you pricing and timing. Yesterday, I was trying to be short Amazon in the one day that the market tried to be strong. And then look what happened today. So it broke below. Same way, nice 2-day short here. So again, you have to do it when the market wants to confirm it. So it did come off the lows, but nice meaty short through 212, went as low as 207. So look at the price point sheet. There's strategies there to make you money. And then here's the moving average, so it stopped there. Google also didn't close on the lows, but once it traded below this 588, it went as low as 583, down another $5. So you just had to pick and choose when you wanted to cover some and stay with some if you've been shorting it ever since the 200-day breakdown. So overall, this pattern to me, again, is somewhat bearish and broken. All the moving averages are starting to curl. So it does seem as if it's going to get to this area at some particular point, and then we'll revisit. Baidu, again, we've been just avoiding it. It's well, like a lot of these stocks now have these lower pivots that we've been trying to figure out if they could bounce back to the upside, but they're getting no traction. And that makes me seem like maybe we get continuation. But, here you had this, bear flag, here's your pull, here's your flag, you got continuation. But every time you step lower, makes it a little harder to sink your teeth into for downside action. That's why it's a tricky spot. Even LVS, I tried being long it. This was like a little trap. Went long it yesterday. Looked like it was going to break above this small wedge after a move from 61, broke 56, been out of it. I think I tried starting to buy it back a little bit in here. Got stopped out every time. Finally looked as if you can get a move back to here. But in heavy markets, things don't have to bounce, especially when you go from oversold to not oversold. And then boom, got hurt today in it. But it could have been worse. I think just to show you how I got stopped out, I got stopped out right here. Look, this was it gapped down. Okay, tried to fill the gap, it couldn't. Here was my stop. I said, okay, it might have even been right here. I said it couldn't fill the gap. So typically you move in the same direction as the gap. Was long overnight. Tried to salvage. I added some, didn't work, and I took my lickings right around here. I think right around like 47.90. I think I sold it. And, saved myself 90 cents, because who knows, I might have hit it out all the way down there, even though it did bounce a little bit into the end of the day. But still, you live by the sword, die by the sword. And my thing is, gap down, couldn't fill, couldn't salvage it, get out of the way, fight another day. Win was upgraded by Goldman. Didn't get much traction either. Look at the daily chart. bear flag not getting out of the way. That's just gross. Here's your outside day. That was your sell signal. Wind loves to give you clues, by the way. It gave you clues every different time to sell it. Here was your first huge outside day, sell signal. Next sell signal was right here. Big green day, made a high, closed below it, harsh sell signal, then you got another one. Then here, look at this, very similar. Tried to break out, momentum left, failed, pow. So you got to look for those type of days. So if you look on a different front, guys have been emailing me saying thank you for Walmart. Walmart was a great stock of the year. I talked about it in December. But it's up 10 days, and today I shorted it for cash flow. Like, oh my goodness, you're shorting your stock. Like, first of all, it's not my stock. I just said this stock has potential to be a macro hold, and let's wait for the market to confirm it, and it did. If you look at today, Walmart, not game over, but first time you had a little bit of a red dog reversal, right? This was your gap up, nice pent up energy. This was your breakout. Here's your follow through. First time it traded through a previous high of 65.76 and closed below it. So to me, that's a short term. If you were long it, trailing it, this was your first sell signal. And for me, I got a little bit short. I'll be short from the highs. And tomorrow, if it opens up a little bit, you could probably add through the low of 65.33 for, a cute little cash flow short to maybe here or even down to here. Why not? Look at this market. So, for me, I'm shorted on the virtual trade floor. I tweeted it. That's why. I had an unbelievable move and first little sell signal. So I'm going to try some. As far as some other stocks, let's see what happened to Lulu today. Go here. Not so much damage, okay, right? It broke out, didn't really give you a way out of it, closed near the lows, but it looks all right. RTHs, let's see that. This was the level I drew this morning, saying it would be nice to see if it held, and it did. So we'll see if that continues, if it could build a new floor, and you could have your low, higher low, another higher low. Banks are still pressured and gross. Little trap here, closing the highs, thinking maybe you can get another move up. And that's the problem, is when you get a move off the lows in a weak tape, closes up, and you think you can get more, you can get trapped. So hopefully some people took some off, and if you, I guess, went home long some, which you could have, because it closed strong, you thought maybe to get some momentum, you had to get out today. Now with this closing the lows, we'll see how it handles this area. If it doesn't hold here, market's breaking 1291. JP Morgan also was heavy all day. I talked about one level to use as a stop. If you tried to be long in here and it broke it, closed below it. You should not be long JP Morgan right now. Next level to see what happens here is right there, 32.26. Remember this? You had your 2-day move, opened up, said if it breaks below and closes below this pivot here, which was what? At the time, 35.76, you get out. Well, guys that follow their rules got out on this day, and you saved yourself another, 3 points to the downside. So you got to do the same thing. Anyway, that's the tactics that you use in a defensive type mode. Cash to me is king. Guys are like, oh, it's a zero return world. You know what? I like to have my money, and I don't care if there's no, if you can't get any interest rate on in other places, and because I'm not going to put my money where I don't understand. I'm not going to buy the euro dollar, the Aussie dollar versus the this then or the yen, whatever. Over my pay grade. I'm not going to start getting into it. Leaders, relative strength, chart patterns, cash. Right now, you're not getting much of a yield anywhere. Talking about safe havens, today, gold held again. Gold held that 148.50. So it just shows you how, like, every time I try and cheat a level and I try and get in there before a potential move, I get a bit hurt. So for people who are getting out or getting short gold today, thinking that it was going to break and close below 148.27 to 148.75, got hurt because that level held. There was no daily close. There was no commitment to the selling or to the short side. So for now, it's still intact. Look what it did again. Held again. Not easy. Held again. Here's your low. This was a low. Bounce back again. They're still trying to defend it. So we'll see what happens here. It's a hard trade, guys. Hard trade. That's why I'm not really that active in it. Okay, but I'm saying if you are long it and you're using this as your level, you close below it, be a bit careful, because if you look at the monthly chart here, it breaks below and closes below this area of 148.53. You then have 140. It's come a long way. Long way from when I said gold can go to 15 to 1700 right here. Remember this? This feels like a long time ago, which it was. This was your inverted head and shoulders pattern. It was on with Erin Burnett and Mark Haynes. Had the video. It's in my little library, and pow. Awesome. You know, it was calculated. Also, you look right here, same way. Now it's a little iffy, but this was, I remember this really well. I don't know if any of you guys were subscribers then, but you know, it was a fun time period. That's when gold had a thesis. That's when there was an identity, and now people don't know. People don't know if it's telling us deflation. People don't know what the printing press is. The economy gets a little bit better. Will it be inflation? For right now, gold is saying it doesn't know. So just be a little bit smaller and be a little bit more careful. So at this point, today was a big trap day for a lot of stocks. You know, if you went home a little long, hopefully you salvaged it or you didn't get too stubborn. There was money to be made in Apple in a lot of different time frames, which I just went over. It didn't like pull out, it didn't pull the market out. I was expecting that if Apple got stronger, if it went, maybe it would drag the market up, but the market was still heavy. That gives me concerns that you can't be heavy there because that could be a trap. And I don't want to think that way, but that's what kept me a little bit lighter overnight there with some hedges. And, I'm going to treat everything a bit different because you have the haves and have-nots. And granted, it seems like everything's a bit more correlated now. We're back to the last year of where you have your correlation of 1, whereas in the first quarter this year was awesome. You could have been long 12 to 15 stocks, tier 1, added on breakouts, made cash flow, held for swing trades. But times change and so does each quarter. And if you guys remember when I had G-Toy here, or we talked at the end of the quarter, we said, now's a good time to lighten up. First quarter in the bag, great move, big gains. We're a sports car, we're not a Mack truck, we could figure it out. Right there, just using a little common sense, that was close to the top of the market. That's when things changed. So sometimes if you do the right thing, you don't have to really forecast what's going to happen because then you're in the right frame of mind to see it. Anyway, still got 2 days left, big jobs number on Friday. We'll see what the claims say tomorrow, and also I think we have ADP at 8:15, so there'll be a lot of headlines once again. Keep it tight, keep it safe, use your tactics, use your stops, keep a mentally clear head, and I'm sure you could scratch your keyboard together and make some money and try and get ready for better times. Scott Redler, T3 Live, The Recap. See you at the morning call. Have a good night.